Welcome to your weekly market update. Interest rates are flat week over week. We've been on this trend line. We saw a couple good spikes. You can see that we have been floating interest rates the whole week. So some calmness in the markets that will probably be shook next week because it's Fed rate decision time. Now, I believe that they will pause. They are unlikely to increase again, but they've already went too far. And let me prove this point to you. So I'm about to show you a chart, which is the last 40 years of 10-year treasury notes and their yields, along with the federal prime rate or the Fed funds rate. So this goes back to late 90s, the dot-com burst of the late 90s, early 2000s. The gray represents recession, right? So anytime the blue line is above the pink line, we see a recession after it. They went too high here, meaning they increased the prime rate too far, right? And then they had to get very aggressive to get out of this recession, right? And that lasted from about 02 all the way to 04. That's when you saw the first big refinance rally. That's when I first got into the mortgage industry. So dating myself, but almost 22 years in the business. Went too far here. Took the prime rate too high. Guess what happened afterwards? A financial crisis, right? Then we really had to peel it apart and last for a long time, all the way from 2009 to 2016 before we started increasing, right? Went too far here. You could argue the pandemic caused this, a very, very short recession, but it was still a recession, right? And then they went way too far, way too long. You can see the lowest federal prime rate ever, right? And they kept it too long. And now the biggest spread that you will see between the Fed's fund rate and the 10-year treasury note. So this is good for interest rates. Every time they cut rates, they go too far, and you will have an opportunity to refinance at a much lower rate. Here's the thing. Home prices stay the same or increase during a recession. It's happened all the way back to the late or the early 1980s, late 70s, right? So get the home now, refinance when they go too far and have to pull this all back, which will happen next year into 2025. They will make things look good during the election year. And that's just how this works. That's how these cycles are going back 40 years. So buy the home, date the interest rate, divorce the rent, be consistent and aggressive on your home search, because there's not as many buyers out there right now. So if you have a low down payment, you've been missing out on getting your offers accepted. You put in 5 or 6 offers. Now to January is your time, because the next spring market will be crazy. That will push rates up, I believe, or that will push home prices up. I believe rates will be coming down around June of next year, and they'll probably take it down too far. So divorce the rent, date the interest rate, marry the home. We're here to help you with that. Call us anytime.